Bad 38 days. He's fallen from 42, that's a probability of victory, all the way down to 31. So it's kind of the Ides of June for Senator John McCain. This could be a factor in the stock market. Maybe he's turning over a new leaf. All right, gentlemen, let me move on. David Malpass, are we losing Mr. Malpass?
Oh, I'm here.
All right, we lost Mr. Malpass. Nonetheless, let's go to Big Ben. Big Ben Bernanke. This is important news. All right, David's back.
Larry, he's there.
Big Ben, and Quentin, you're there. That's the most important thing. Big Ben Bernanke speaking earlier today in a conference. Please take a listen, gentlemen.
We are currently monitoring developments in financial markets closely and considering several options, including extending the duration of our facilities for primary dealers beyond year-end, should the current unusual and exigent circumstances continue to prevail in dealer markets.
All right, he's going to keep lending to Wall Street, to the so-called non-bank dealers, Goldman Sachs, etc. Now, let me put this chart up. The irony is the dealers, the non-bank dealers, don't really want the money. Right. Borrowing from the Fed has dropped precipitously from about $40 billion when this thing first started in late March to a measly $1.7 billion as of the latest Fed banking week, which was July 7th. Now, Quentin Hardy, what do you make of this? Bernanke says, I'm going to keep lending maybe out to 2009. There were some people on Wall Street worried that the loans were going to stop maybe this autumn or late in the summer. And Wall Street doesn't seem to want the money, which could be a sign of financial recovery or not. Weigh in on me for this, Quentin. How do you rate Bernanke? What's he doing here?
They don't want the money because they're a bunch of fraidy cats freaked out by what happened in subprime, and it is still going on. For Bernanke to say the current unusual conditions is astonishing because it's been unusual for about a year. This is the status quo, and it is caused by excessive housing buildup, and it's not over yet. I just drove to Seattle and back. My God, I love this country. My God, I'm scared by how many for sale signs you see. It's like driving through a mausoleum as far as that's concerned. But the fact of the matter is, there's more to come. I talked to Sam Zell, real estate billionaire. Normally in the United States, housing ownership is about 62%. In the boom, it's shot up to 69%. It's got to regress to the mean. It's at about 67. It's got a couple of percentage points to go. More supply is coming on the market. It scares the financial guys to death. They won't take any more loans. They just shut their doors. They're under the covers, hoping it goes away. That's actually hurting things.
But Vince Farrell, it seems to me the market liked the Bernanke announcement today. And the financials were up huge. What were they up? 6% on the day. You go down the list, there's some big gainers. How do you read Bernanke? He's saying, I'm going to keep the window open to the Wall Street firms. There aren't going to be any more Bear Stearns. Now, this is potentially significant because the Fed has been grappling internally with when to close that window and what kind of rules to stipulate. They basically said, the Fed wants a little more supervisory power. They're going to work with the Security Exchange Commission on reporting requirements. How did Wall Street investors take this?
The fact that there's a window, if you need it, is very comforting. And again, I kind of disagree with Quentin. The Wall Street banks are not taking this money because there's a stigma attached to it that they're in a bit of a problem if they have to go. Now, that imposes a discipline by itself that you don't want to have to go to that window, and that is good. I don't think I draw a huge conclusion that they're just not making any loans. I think they're working it through. I saw today that there's the thing called Remix that has been created by Goldman Sachs and J.P. Morgan, which is repackaging some of those old collateralized debt obligation things. So forget what it is because your mind gets so confused. But Wall Street will figure out a way to make the loans. They'll figure out a way to address the appropriate level of risk. They will not go to the Fed because there's a stigma attached to it. But it's nice to know it's there. And I think, Larry, the big reason the market rallied today is the price of oil for the second day in a row went down. I appreciate
that. But we're going to come back to oil with Boone Pickens. However, Jerry Bowyer, this was a banner day for financials. Right. Financials have been shot, kicked, punched, kicked while they're down. You go across, banks are up 8%, some regionals like Fifth Third up 12%, Wachovia at 12%, big guys like the B of A up 9%, J.P. Morgan Chase.
Who knew a dead cat could bounce so high?
Well, I knew that was coming, but the fact is Merrill up 8%, Lehman Brothers up 6%, even these miscreants like Freddie and Fannie were up 13%. Jerry Bowyer, Quentin Hardy disses this. What do you say to this?
Well, what I say is that Bernanke is saying, Bernanke has the solution to the problem. And the solution to the problem is using the discount window rather than the open market operations. That's the key. Now, he needs the guts to really do that. That's why the market reacted the way it did today. If you're saying to troubled banks, here, we've got the emergency room open, and you can come here anytime you need, and we're not going to shut it down, and it's going to be open 24 hours a day, and therefore you don't have to flood the whole economy with dollars, then that's why we had the pullback in energy prices.
Well, he's
today.
backstopping the backstop. That's the way I look at it. The original backstop was Bear Stearns in late March. What he said today is, I'm going to keep backstopping the backstop, even
so
though
it's
the
lender
demand's
of
not
last
there.
resort stuff rather than Keynesian fine-tuning to the monetary system.
Why do you think
it's a great thing.
Why do you think Quentin Hardy has misunderstood this story, Jerry?
Because Quentin Hardy is sort of committed himself ideologically for the entire time that George Bush has been the president of the United States to think that everything must be going to hell in a handbasket. Because that's not his guy.
The most successful investment strategy of the past 8 years.
All these lefties are always saying everything's terrible, everything's terrible. And then in January, when Obama takes the oath, then everything's going to be great. Even if the unemployment rate is 6 or 7%, they're going to say, oh, really? It's really great that the unemployment rate is 6 or 7%.
Oh, Jerry, I didn't say that. I just didn't trust that feckless rich boy from Greenwich who pretended to be a take-charge Texan.
My
Look
point.
what he's done to your dollar. He's done to your stock. He's done to your foreign policy.
There. That's it. That's right. He doesn't like him politically. He doesn't like him culturally. He thinks he's a dummy.
He didn't deliver.
It's simple.
Now that
just that they're smarter than everybody else.
Now that we've resolved this in Kumbaya style, as I knew we would, Dave Malpass, I'm going to put up a chart because I want to ask you about the interest rate target implications of this Bernanke move, if any. First of all, we have the Fed funds futures market, which has changed dramatically, okay? A couple of weeks ago, people were expecting 4 Fed funds rate hikes. That was at the height of the Bernanke dollar defense anti-inflation rhetoric. Now, David, as of today, the first rate hike is now pushed back to December. It was August, it was September, it is now December. And the second hike to 2.5% is all the way back to March. It was December, and then January was a third. David, by backstopping the backstop and keeping the lending window open to the Wall Street dealers, the security firms, does this affect the Fed's interest rate targeting policy, which is to say it's dollar defense, which is to say inflation, which is to say oil?
I don't think so. It can raise interest rates even though it's keeping the window open. So I would almost read it in a contrary way. By saying that they're going to keep the window open longer, that means that there's more chance that they're going to be hiking because they've got the room. That is tending to hit oil hard, and that's what the market is reacting to. If the equity market and if financials catch a whiff that money is coming in from abroad because the dollar's no longer going down, it's either stabilizing or going up, then the major leverage in the world which is the capital that's being held abroad. There's trillions of dollars held outside the U.S. that won't come back until we stop weakening the dollar.
Quentin Hardy, are you listening to this brilliant analysis by David Malpass? This is the most incisive, erudite, insightful insight I've seen. He's saying Bernanke's statement today to backstop the backstop and keep the lending window open is paving the way for an earlier Fed funds hike to defend the dollar and beat down oil prices, and that's what the market showed, Quentin. This is brilliance. Are you listening to Malpass's brilliance?
I am. I wish you were in the same room with him because he smells like vanilla ice cream, too. This stuff is totally true. If we would do our sit-ups, if we would be a serious country, if we would actually take the hard steps and strengthen the dollar, yes, this would be a much better outlook.
All right,
unfortunately, George Bush, Gordon Brown, Nicolas Sarkozy, need I go on?
There you go again. There you go again.
No, the G8 will not do the hard work.
We got to get out of here. We got to get out of here. We're going to come back. We're going to look at what Henry Paulson had to say about bottoming home prices. We're also going to look at what Boone Pickens had to say about drill, drill, drill. Our market guys have so much more to do.